Good morning to all traders and welcome to this series Marketing Insights video provided to you by Orbex, Head of Investment Research. Star Roasters here. It is the 17th of March 2020 and we'll have some very interesting opportunities to talk to you about. Today is the day that I will go back on the euro dollar and also dollar yen. I see some very interesting patterns. Actually, both euro dollar and dollar yen have completed inversely, of course, an expanded flat pattern, and now that seems to suggest that there is more downside for euro dollar, more upside for the dollar yen. We are going to see that in a minute. Before we go ahead, I just want to mention that we've seen these emergency cuts taking place once again from the US, from the Fed actually this time, 100 basis points down to zero. Okay, but the question is, what is really going on? And we don't see really the treasury is going up. Okay, now when usually the treasuries don't go up, at least the 30 years, if you may, it means that the financial world, it doesn't really look at these interest rates cuts as a move that is going to really support the economy in the longer term if you look at the 30 years, or even medium term if you look at the 10 years, right? So what does this really tell us? It tells us that there is a global cash crunch, right? That's the reason we've seen the latest liquidity injections from the Fed and other banks actually as well. So we need to have mainly fiscal measures as well coming into place. But even just that probably is not going to help. And the risk of a recession here is very, very, very high. Now, over the overnight, we've had also China's PPI figures coming out at minus 0.4 year on year. And that is after we've seen the effects of the coronavirus coming into play. So most of the other economists were watching closely this event to see how their own industries are going to be affected by the coronavirus. And that spells a bad result. Now, I want to go ahead and start first with the euro dollar. We were talking about this opportunity. Actually, we talked about that scenario coming into play, that becoming an X rather than this being an impulsive move to the upside, right? So we've had this nice flat correction over here for way of W, and then a simple X down there, and then another move, another expanded flat over here for way of Y, and that seems to suggest that we're going to move lower again in an ABC formation to take out wave Y, right? Now from here we can either go up, okay, or go lower, and that would of course become a triple zigzag pattern because that would be a X here and then down Z, right? Now this is very long term at least. Now in the medium term I see this going down to the 1.065 or so. This is the 6 to 1 Fibonacci extension of this move down here, right? Let me just draw that there. From there to there, Fibonacci extension takes us to 1.0665. Very good level to look at this potentially ending down to. Right now, with wave A not completed yet, because I see this actually as 1, 2, 3, and 4. Most likely going to turn a little bit sideways with high volatility and then take out 5, then A, B, and C with another 5 move wave to the downside. Now on the dollar yen, as I was saying, I was just actually looking at this opposing expanded flat, right? You see, I was talking also about this flat pattern on dollar yen. We've also seen a flat over here, a flat expanded flat over here, and this is the third one now. It's the one that looks like it's actually lasted longer than any of the other two. Okay, that doesn't really mean anything, to be honest. It's just that we are having a longer sideways move, which indicates actually potentially even the high volatility levels that we have been seeing actually in the markets, right? Now, I'll look at these with a corrective pattern, right? W, X, and Y. Okay, so this is an ABC. I see this as an A, B, okay, this B wave is a triple zigzag, and then I'm expecting another W, X, and Y, since we've actually seen this happening down here as well, W, X, and Y for wave A, right? So I'm expecting wave C to be duplicated at least. So that would indicate that we're going to go to at least the previous high. That's 118.55 or so. And to be honest, I really believe that we've ended wave B down here with a triple zigzag. And now I see this move to the upside being again 1, 2, 3, 4, F5. I'm expecting as well to the upside on dollar yen, contrary to the euro dollar, right? I'm going to expect an ABC pattern and then an AB 1, 2, 3, 4, F5 again for wave W, then wave X and wave Y. That is going to actually end this corrective move and also the cycle wave X, and from there is where we're going to see prices again moving lower in a primary ABC pattern to potentially break to fresh lows.